Hi there, welcome to my YouTube channel. I'm Michelle Swann with Swann Realty Group, and I'm here with Alexis Farrar with Prime Lending, and we're doing part 2 video on first-time home buyers or just a home buyer that's wanting education on the loan process. And in part 1, we discussed what the buyer has to go through the application and get a pre-qualification letter. And we're gonna start in this next step is, what do you do now after you found your home and you're under contract and you're gonna close in 30 days? What's the next step process? So Alexis, what is the loan approval process after I have now gotten a contract and we have a closing date? What's the next step for you?
So you've sent me this contract, it's fully executed. That means it's signed by the seller and the buyer.
Okay.
And now I am going to get back with our new buyer and we are going to secure the interest rate. We're going to start processing the rest of the loan. Normally I've taken them through underwriting. So really all we need now is an appraisal. And we could close in a couple weeks, but let's back up and say we aren't through underwriting. Normal process is 30 days, pretty much standard. So let's, say we've collected the W-2s, pay stubs, bank statements, pretty standard. And if somebody's self-employed, we're going to go into tax returns. Okay. We've gotten all those documents in. And now we're going to secure the interest rate. So I'll lock the rate. They'll have the float down feature as an advantage in the market to get a lower payment during the processing of the loan if we can execute getting the better rate. And I'll give them payment. We'll walk through again what the costs now are going to be. We did that in the beginning. We went over roughly before they searched and found the home. Now they've found a home and they're under contract. Now we have more real numbers. So we're going to go through those numbers again, and I'm going to go through the entire application and say, look, this is a $400,000 purchase price. You're putting 20% down. Here's your payment. If they have PMI or not, we're going to go through the entire payment, what the taxes and insurance. Now we have a property, so we know what those property taxes are. And then we're going to make sure they have the funds and they're comfortable with all of that. And that conversation wraps up. And then from there, we're going into processing. So my processor is going to pick up the file. If there are any documents that we upfront as the loan officer haven't gotten or could have missed, or there's something additional needed, our processors will collect that from our borrower and then put the loan through the first underwriting run through. And actually, there's always two. And we really try not to. I've come from, I'm not going to say other places, but I've been in big banking where you've got a lot more restrictions, I'd say. So I'd say, for our underwriters, you really are going in the first time, which is the initial approval, and that's a conditional approval. The underwriter is going to set conditions. That means those are just some additional documents. It could be an extra bank statement. It could be a question why there's a deposit, where that deposit come from. These are conditions. And one of the conditions is we're waiting on the appraisal to come back. So we collect whatever we need. Now that the underwriter has set those conditions, send that back to underwriting, and then with the expectation of getting a final approval. And then when we get the final approval, and we're keeping you and our buyer updated throughout the process, and our seller's agent all through the process. And then we're going to go into our closing department, and everything's a queue. It's very digital as well, but we go into what we call the closing queue. We're basically getting in line. We do it in underwriting, pretty much standard in our business for most lenders. And then we're going to be reaching out to you and our buyer saying, okay, we got this closing date. It's the 20th of the month, and everybody prepared. We're ready. I'm giving them their final numbers. They know how much they need to bring to closing. And then we all go to closing. They sign on the dotted line. And then we wait for 2 to 3 hours and we will get funding. That's when it's finished. A lot of people think when they sign at the table, they think, oh, we're done. I go, we have one more. We just got to wait for a couple hours. And sometimes it funds in 5 minutes, and then that's when they can actually have their keys.
So once it's officially funded, that's when, gotcha. All right. Okay. So you briefly touched on this a little bit, but what is PMI and how does that work?
PMI is when you put less than 20% down. 20% down is the magic number to eliminate having PMI on your loan. Private mortgage insurance. And private mortgage insurance, I'd say there's probably 12 to 15 companies. We have access to all of them. And that's important because PMI is credit score driven.
Okay.
So it's also a kind of underwriting the loan. If the PMI companies are basically doing their own piece of an underwrite.
Okay.
When they supply us, because we're not part of those PMI companies. The mortgage lenders don't own those, they're a private entity.
Okay, so it's a third party offering that insurance to the buyer. Okay.
Yes, and we can actually run in a screen where it'll tell me what's for this loan, for this person's individual qualification, it will pop me back what's the best monthly cost for their PMI.
Okay,
so
gotcha.
And it'll read it like that in a whole picture, in a whole scenario. So then the PMI gets more expensive the less you put down. So the more equity position, the higher equity position. So let's say somebody's putting 3% down, and let's say their PMI is $150 a month. They put 5% down, it's going to go down to about 80.
Okay.
Almost cut it in half.
Wow. Okay. And that's good to know as far as the cost of what we're looking at when it comes to that actual insurance. Okay.
Yes. And then you go 10%. Those are the 3, 5, 10 are where the rates break. So so that's what's the down payments that you want to cover where it's important are 3, 5, and then again 10. 10 would drop because you're getting closer to the 20%. And the closer you get to that 20%, the cheaper the PMI.
So a good question I've always had a lot of buyers ask me is, when I paid into that 20%, can I remove that PMI?
Absolutely, and that's a good question because that's usually the following question, and I go over that with everyone that does end up having PMI. You can also buy out of PMI. It's called single payer. It doesn't in this environment right now. It's not something that's so attractive in a higher rate environment because we're going to refinance them when those rates, the minute they go down, which we expect sometime next year. That's what
historically
we're expecting and hoping. But you don't want to get in a position where you're buying it out because it breaks you even typically in 4 to 5 years if you buy it up front rather than waiting for it to automatically fall off. If you buy it out up front, every time I've done the math, they break even out at about 4 or 5 years, whereas the 22%, you got to hit 22% equity position for the automatic to fall off. And then, so they're reaching out back to the lender, can we remove, automatic, you might have to get a new appraisal. That would maybe be the only thing. Sometimes you don't, but I mean, worst case, they'd pay for an appraisal
to remove it. Take it off. Okay, good. All right, good. So, are there any special programs with a first-time home buyer that you can kind of let us know? Because there is so many people out there that really do want to buy a home. And what is a first-time home buyer? What is that exactly?
Okay, so first-time home buyer, if you have not owned a property or had any interest in a property, not on a title of a property, any ownership interest in the last 3 years. So if you were sold a home 4 years ago, you requalify now as a first-time buyer.
Great.
Okay. And so there's many programs for first-time buyers. We have every one of them you can think of, but I'll say the 100% financing there's a very limited category of those.
Okay.
And also VA, of course, is a 100% loan. The down payment's covered, right? USDA. Okay, that's rural though. They're choosing, and the house has to qualify. We put it in the link. There's a USDA site. We make sure that the home qualifies because it's outside the city limits.
Gotcha.
And then we do a special calculation for our buyer as well. And then there's down payment assistance, which I do TSHAC, and that is anywhere from 2 to 5% down payment assistance, and the rates, of course, go up the more assistance you're taking. But that basically is a way to cover your down payment.
Nice. Okay. So there's a lot of options, it sounds like, for first-time home buyers just from what you've already discussed at this point.
Absolutely.
Wow. Okay. So can you tell me, what is a loan estimate and when does that come into play during the process of, when I've already submitted my application, now I'm, moving forward and shopping for a home. When does that loan estimate come into play?
It is legally, it has to be disclosed to within 3 days of application. Okay. So we're giving numbers to our clients, always within that time frame. Usually, like I told you in the first segment, that we're going over those numbers and we're giving them that estimate usually within 24 hours. Turnaround time. Okay. So then I'll have them sign, they e-sign some what I call dummy docs, and that puts them through that process I was talking about, going from a pre-qualification into a pre-approval. Even while they're looking, I still want to collect the documents, because if I can call the seller side and they're in a multiple offer situation, I can confidently say, look, we've already reviewed their documents. I've been in the business 22 years. I've been with Prime Lending 11 years. We're solid. This looks good. It's on its way to underwriting. But if I need to do that before it goes through, but it takes about 10 days. Now we have a full underwrite. There are some restrictions to it, but we have a full underwrite that we just rolled out that is 24 hours. And they get the documents that we send them right away. They're going to get that loan estimate. And it's a 3-page document. It's going to have the rate. It's going to have the purchase price, the loan amount. It's going to have all the estimated third-party title fees, the appraisal fee. It's going to have the property taxes and the estimated homeowner's insurance.
I'm going to guide full disclosure on a lot of things.
Yes. And then they're going to see it again. They're going to see an initial loan estimate. And then at the end, when everything's locked, and we're moving forward and processing the loan, they're going to see it again in the final stages.
Gotcha. Okay. Wow. Okay. So how do you handle rate locks? If I'm, wanting to really catch the market when the rate has dropped and it's gone down, a quarter of a point or whatever, how do you handle that situation?
And that is, we love a decreasing market because of our float down, which is that huge advantage I talked about in the first segment that we have. It's pretty unique to Prime Lending that the float down is not really an additional cost. There is a cost. Sometimes it depends on how far they want to go down, if they're going to pay a fee or not.
Gotcha.
But it's a huge advantage to drop and in the process, the normal 30 days of a loan process, right? If the rates drop, we will execute the float down, get them a better rate and a better payment. So the rate lock itself, though, we're normally locking in a 30-day rate. That's the best pricing. The longer the rate lock, the more expensive the rate. You can still get the same rate, but you're paying more for the rate if you have a 45-day lock or a 60-day lock. So we really, most of us lenders are trying to get into
the shorter,
30 days.
The shorter time frame, which makes sense. Can you explain the whole closing process, like what from beginning to end, what that looks like for the buyer?
So when they receive from our closer, they're going to receive their final numbers, their final, and that our closer is going to work with a closer at the title company. So we have a mortgage closer and we have a title closer that are working together. And I see these emails going back and forth on every loan, and they're balancing the final numbers. Okay. And we normally get a preliminary estimate from the title company. My processor does that up front. We get all of their fees and numbers. And so then at the end, they're just balancing out. There might be HOA transfer fees.
That may be different.
Okay, so there's different, some houses have an HOA, some don't, but that's an example. There might be some credits in there from the seller, and we're just making sure everything balances, okay? And then the buyer is going to e-sign. We have a hybrid e-sign, which is fast. We will be going to, I think in about a year, a full signing electronically.
Oh wow, that would be amazing. Yeah, helpful a lot of people that are out of town or just having difficulty actually getting to do the closing, and you can do it electronically.
And it will fund faster.
Absolutely.
So
absolutely.
Yep. So the closing process, they will sign part of the documents at the table. When we've gone closings together, that's what they're signing. There's just a few that they're having to ink sign.
Right.
There's a portion that they're e-sign before they go. It just kind of speeds up the time. At the closing table.
Wow, that sounds amazing. So, can you tell a buyer who is looking for a lender, what would you suggest that they do in order to really know that they have a good partner that they're working with?
Yep, and a real estate team. I mean, you and I have been extremely successful, and we have gotten to know how each other works. We have that trust. We've built that trust in each other. You know how I operate. You know that you can give me your client and our team. We're going to get it done, and you don't really have to check in. And I'm checking in usually with you and saying, and if you have a question, there's 3 of us. You can ask us a question. We're always there. But the best thing to do is to go on and just whenever you buy anything, don't you? I do. Go Google the best lender. The best pair of shoes or the best hair products or whatever. So we have a full profile on Zillow, and we have a full profile on Google. But that's what you want to do is make sure that you're finding people that other clients have absolutely put their names on.
Absolutely.
And they have repeat business, and you want to find people that have been in the industry. I'd say at least 5 years. You probably, you need some experience,
Right.
even being a realtor.
Absolutely.
You want to work with experienced people that have seen changing markets as well.
Exactly. And working with multitude of people and being able to understand what buyers and their needs are. And that way that you can meet those needs very easily. So that's awesome. And I love that you know that at any point you can get on Google or you can get on Zillow or any of these platforms and be able to know that you've got a trusted person that you're going to be working with. So that's great. Well, awesome. I hope that you guys have loved this video, and please like and subscribe. I will be putting out more videos every week. So hope you guys have a great day. Thanks so much for watching.